Hi, everybody. This is John Soroka with Soroka Brand Development, and welcome to our webinar today. I'd like to ask. All right, everybody. Well, let's get this started. Hello, everyone. This is John Soroka with Soroka Brand Development and the Mortgage Technology and Marketing Committee Chair, and welcome to our webinar today, Consumer Controlled Data is King. Before we start, I'd like to thank our MTAM committee sponsors at Tavant. Tavant FinConnect is a mortgage data and services hub that connects the internal and external systems of the mortgage ecosystem to enable a complete digital mortgage experience for the borrower. It has over 130 connectors from more than 60 service providers, including Fannie Mae Day One Certainty designated vendors. Tavant FinConnect witnessed 10 million transactions in the last 12 months preceding January of 2020. With the change in market conditions, low interest rates, and high refinance volumes, FinConnect processed over 1.5 million transactions in March of 2020 alone, up 71.2% from February of 2020, demonstrating its scalability and resilience to massive spikes in transaction volumes. To learn more about Tavant FinConnect, email hello@tavant.com. And now for our topic today, ladies and gentlemen, consumer control data and how it drives the mortgage process. Today, you're going to learn what data aggregation is, how data drives the mortgage process, whether consumers are willing to share their data, and you will also hear practical experience from a lender. So with us today, I am thrilled to present to you Brian Vieaux, President of FinLocker, Kevin Peranio, Chief Lending Officer at PRMG, and Paul Diegelman, VP Digital Payments and Data Aggregation at Fiserv. By way of some background, this webinar is a production of the Mortgage Technology and Marketing Committee. The committee was formed to support the development and dissemination of new technologies and marketing strategies that the mortgage industry needs to embrace. So as we go through this, please submit your questions and I will direct them to the right individual as they come in, or you can wait until the Q&A time at the end. With that, over to you, Brian.
Thanks, John, and welcome everybody. As John mentioned, my name is Brian Vieaux, President of FinLocker, and I just want to spend a minute or two just to talk about how I got to where I got here at FinLocker. So I invested in and joined FinLocker last summer following an extensive career in mortgage banking with the last 8 years running the third-party business at Flagstar Bank. We can advance the slide, Dustin, if you wouldn't mind. Thank you. And so one of the things that I saw at while I was at Flagstar was race by big fintech and some large financial institutions to get to the consumer first. And what was fascinating to me, it was really all about the data. And so at FinLocker, a white label consumer engagement platform, we combine many features that consumers would get on disparate apps like Credit Karma, Zillow, Mint.com, to name a few. And one of the key differences there, the Brian mentioned, are principally sitting in front of are then linked and matched to financial institutions on kind of a lead gen basis, whereas FinLocker is a white label platform. Clients, mortgage bankers, financial institutions give to their consumers that combine many of those features and functionality that I mentioned into one super app. You can advance here, Dustin. And so what we saw at FinLocker and continue to see is, especially with some of the larger financial institutions, was this need and desire to be able to cross-sell consumers. And the fact of the matter is, having consumer data and having consumer data allows you as a financial services provider and in mortgage to make better and more personalized offers to consumers. And at the same time, we are seeing consumers being willing to trade or share their information as long as in return they're getting something that they perceive as valuable for that share. And we're going to talk a little bit more about that when we get into Paul's piece here. For FinLocker, what we provide to consumers is access to, we allow them to aggregate their entire financial life and kind of create a single pane of glass for all of their financial accounts in one place. We enable budgeting and savings tools that help them, and they're really helpful in the journey towards home ownership, specifically as you think first-time home buyers and helping them get there for that event. We also enable for consumers and for those that already own homes, we provide them access to see the value of their property as well as those near theirs. You can advance here, Dustin. The key, one of the key pieces for FinLocker, and I think across any data aggregation tool, is really safety and security. In our case, and one of the things we're talking about today is customer control. So we have multiple layers of security on our platform. In fact, it's bank level security. We're subject to audits by folks like Fannie Mae, Freddie Mac, and Fiserv, who's on this webinar with us, as well as our customers. And so we're subject to pretty much the same level of bank oversight as it relates to data security. And so I think that's uber consumers that are using tools like FinLocker to get comfortable with not only aggregating their data, but ultimately sharing it. You can advance from here, Dustin. So some of the features I mentioned briefly are home and mortgage analytics. We also link consumers to their credit so they can access their credit score. They are alerted on any changes to their credit. Loan product recommendations and offers is a feature inside of FinLocker, and this is where we leverage the consumer's data in combination with a financial institution's product and pricing schema or system to make very custom personalized offers that are relevant for that consumer at that point in time, again, based on trended data and events that are happening that we see inside their FinLocker. You can advance, Dustin. Finally, I just want to share that we're both available to consumers on the desktop as well as via mobile. We're a native app on iOS and Android. And so for our clients, FinLocker becomes an extension of their tech stack, but more importantly, it becomes an extension and a connection directly to the consumer on their phone, on their mobile device as a native app. So when we talk about any kind of messaging and communications that are occurring between our platform and the consumer, it's happening on behalf of our client, the lender, originator, bank, or credit union, again, through that native app function. So that's my brief infomercial on FinLocker. I think what we want to talk about now is the importance of and relevant consumer data, and in particular in our current environment, right? We've seen here at FinLocker, we've seen in the last 4 weeks a pretty significant increase in adoption and usage on our platform. And part of it, I think, let's face it, people have more time right now to work with financial tools like a FinLocker. I think there's also, we're seeing a trend where people are wanting and preferring to do more from a digital perspective and understand that means they're going to have to share data with their financial institution, with their lender, and they're willing to do that, again, if the trade-off's there. And the trade-off today could be that there's no other option but to do a transaction principally remotely, digitally, over the phone, over the web, et cetera. So that's one of the big things we're seeing, specifically coming out of this current COVID crisis. We've had some additional cases that have surfaced throughout this crisis, both on the front end, on the origination side, but now also on the back end, on the servicing side, and specifically with the growing population of consumers in forbearance. We're engaged with some mortgage servicers that are looking for innovative ways to get closer, more closely connected to their borrowers, especially early on in forbearance, and then potentially looking at ways through that connection to enable a transaction down the road. And if you think about the sequence of from a forbearance to the next stage of loss mitigation, could end up, some loan modification application, and enabling a consumer to store important data elements as well as documentation that are ultimately going to be needed downstream in a tool like FinLocker could be, make that servicing modification process much more efficient downstream. And we're seeing some definite increased interest and activity as people think about it, be more efficient on this growing population of consumers and folks. Let me take a pause and pass the baton over to Paul at 5.
Great. Hey, thank you, Brian. So, Dustin, if we could jump one more slide ahead, please. One more. So perfect. So some amount of the information that consumers can access via a program like FinLocker is based on the consumer's own data that they have agreed to share digitally. And the way consumers share this sort of banking information with a platform like FinLocker is through a technique that is called data aggregation. And the slide that you see on the screen shows the process from left to right. And on the left, the consumer discloses to a lender or to a fintech app or to some piece of technology that the consumer would like to share their information. They tell that app or platform where they bank, their username, and their login credentials. And at that point, those credentials are then passed to an aggregator like Fiserv. And in step 2, we then use those to go and hit the source connection. So maybe it's the consumer's checking account or their savings account or an investment account that they've got at an investment advisor. And we pull in the information that's been requested. And then in step 3, we've got to clean it up and normalize it because not every bank serves up, bank balance doesn't look exactly the same when it's served up as data by every single, one of the 11,000 banks in the US. So we've got to clean it up, normalize it, and then we deliver it in step 4 to the application that the consumer has asked for. So in today's context, we're talking about mortgage platforms, but this data aggregation capability exists in many different use cases. Many folks on the phone have probably connected their bank account to Venmo, or maybe they've connected their bank account to some form of online wagering app, or they've connected it to a personal financial management app, where they've given their wealth advisor this sort of information so that your advisor can figure out all of your assets and help you manage your held away assets. So this process it's ideal in mortgage. It's also ideal in many other use cases. So next slide, please. In the opening, John asked if consumers will indeed share that sort of information. And it's an excellent question. And, like any technology, there's always a group of folks who are uncomfortable. That said, if you look at the top right of the screen, our platform alone at Fiserv has over 10 million consumers for whom we connect their bank accounts to lending applications or platforms every single night. And Brian made an interesting statement about growth in the last couple of weeks. For our clients who are in the personal financial management business, we've seen 20% growth give or take, in the last 3 weeks, as folks really start to dial in on, how do they work with the budget that they've got? How do they best understand the assets and the funds that they have available? And we have also, specific to mortgage lending, we have been pulling anywhere from 5 to 10% more bank statements that then fit into the lending process through this process in the same way. So there's a lot of information that's available. Consumers, given different demographics and different thought patterns, are willing to do this in a lot of cases, and it's begun to continue to grow over the last couple of weeks because of the current crisis that we're in. Next slide, please. So there is, in the process of data aggregation, there is a significant amount of data that consumers may choose to share. And the screen here represents a lot of the different data elements and the sources that consumers can share. So if you kind of work your way, start on the top right, deposit accounts. Many consumers want to share the activity, the transactional level activity, debits and credits that sit in their checking account or their savings account. You'll also see folks sharing information from retirement accounts for a variety of reasons, or investment accounts, even liabilities. Aggregators like Fiserv can pull things like mortgage balances or credit card statement balances, or the amount of what Zillow estimates someone's home is worth, just as a piece of data. So there's a great amount of data that consumers can permission for the provision to different apps and different platforms to speed up their process, to give them a better view of what their opportunities are. In the FinLocker case, to help folks become mortgage ready, which is certainly an important part of home ownership and financial wellness. So if you would, next slide. Brian made reference to security, and this whole process doesn't work if the data is insecure or unsecure. And so there's a variety of different ways for an aggregator like Fiserv to get the information, to keep it safe, to keep it secure, and to serve it up to the consumer's selected app or platform of their choice, so that it stays secure. So that's a fundamental piece in this whole process. If the data is not kept secure, it's going to raise significant issues for the banks who have provided it, an aggregator like ourselves, a mortgage platform. So the safety and soundness of the data from an end-to-end process is incredibly important. So I'm going to turn it back over to Brian for this last slide from me to just talk a little bit about some of the capabilities that together we've stitched together to help borrowers become mortgage ready and to work their way through the process. So Brian, I'm going to send this over to you.
All right, thanks. I got a text saying I'm coming, getting a little choppy here, so not going on with the Wi-Fi connection. But FinLocker predated my joining the company when FinLocker and Fiserv partnered up. But as FinLocker was kind of evolving and building the product out, there was a need. They knew what their focus was on initially, and we started our company really in the middle of the mortgage process. So the company, the product was founded to help solve what was a very inefficient process between processors and underwriters as it relates to managing asset data. And so you think about traditional underwriting involves loan processors gathering bank statements, months of bank statements, and depending on how long the mortgage process takes, potentially having to go back and get new bank statements. And so FinLocker, again, started in that middle of that process. So they connected with Fiserv, really helped provide the data, the asset data, as well as the ability to do this on that data to help streamline mortgage processing and underwriting processes. It was very critical that the level of security for the connections to access and present that data were there. And then as we thought about the future of our company and the product, being able to scale it and then making it easy to integrate and connect to with our clients. So we're a B2C platform, so we need to connect not only with an aggregator, Fiserv, but also create easy points for our customer in order to enable their relationship with the consumer. And so that's where our business that we presented to Fiserv, and I'll hand it back to Paul to talk about how to help for that.
Yeah, so I think one of the keys in what Brian has just described is the reliability of the data. in a mortgage process, as folks are reviewing applications and thinking through the credit decision, having the data available quickly becomes incredibly important. And so that's part of what we focused on with FinLocker, is ensuring that when the data is necessary, we've pulled it, normalized it, and presented it in a timely fashion so that the process can continue to move along. So, maybe Kevin, it's time to flip this over to you.
Yeah, I appreciate that. Thank you. It's interesting when this topic came up and we were saying, how would we make this interesting? How do we kind of put this in layman's terms? We're talking about data aggregation, and everyone keeps talking about data being the new oil. Oil's pretty cheap, by the way, right now, and so is my internet connection. So I apologize if it sounds like I'm on net zero or Cricket Wireless over here, but the whole world's in a global pandemic because somebody ate bat soup. So, but look, it doesn't change macro trends. I am on the road about 50% of the year. I go to trade shows, I go to conferences. I'm trying to find ways to make our business more modern. And one of the trends that I've been noticing, and again, you don't have to be on the road to catch this. And if this is your first time to hear it, I'm here to tell you that borrowers want more control. We talk about the fourth industrial revolution, and what that means, the entire globe is interconnected on demand by their cell phone. They want what they want, when they want, how they want, and they can get it. Amazon has been a big push for that. And what's crazy is, out of this global pandemic and all of us having to be sheltered in place, this trend just got sped up. And so because somebody in Wuhan ate bat soup, people who never would give Amazon a chance are now giving Amazon a chance for like toothbrushes and toothpaste. And so borrowers are ordering food more. These restaurants that are closing, they're not going to reopen. Commercial real estate, commercial owners, they're looking at their space and saying, well, what the heck am I going to do? Who's going to come in here? I'm not trying to say this in a doomsday thing. I'm just saying a lot of the trends that we see in retail are being accelerated because of COVID-19 and our shelter in place. And how does that impact our business? So I've been watching technology out there, and I've been watching specifically FinLocker for about 2 years. Brian Vieaux literally was doing what I was doing except for Flagstar. And so when he went over to FinLocker, it really piqued my interest because, I said, okay, well, what do you know on the inside that I'm not seeing? And so you see them partner up with Fiserv. You see them partner up with great data companies and data aggregators. And then you look at the actual user experience. Think about borrowers controlling their data for the mortgage industry. We're talking about, a combination, in FinLocker at least, there's a combination of someone who puts, if they choose to, and it does skew younger. Although I will say, surprisingly, all age demographics are really adopting this kind of technology, especially now after being forced to sit in your home and you have to do everything from your phone. People want to control, they want to look at their credit, right? We've seen Credit Karma for a long time. People want to monitor their credit. They want to watch it. They're interested in it. What is this algorithm? What is it that I can do to make it better? People always look at their bank account. And they always look at how much money they make. Well, now you can put it in something like Mint that's out there, where you can do your budget and you can control your finances. But what if you can put it all in one place and then tie it into your mortgage experience? The average person does 9.8 mortgage transactions in their lifetime. That's several purchases and many refinances. So for us, let me get even more specific to PRMG. So I sit on our senior management. I'm one of the 4 partners in the company. And so I have my hands in a lot of different things. And one thing we do service a little bit of our business. Thank God we don't service a lot, because these servicers are getting crushed right now with this forbearance thing. But what I can say is we sub out what little we do. So about 6,500 units is in our portfolio. And we sub it out to Sinlar. Now Sinlar is great. They're one of the top 2 or 3 sub-servicers out there. But I don't have technology with them to white label my statements. I would love to put the name of my originator, or at least a direct connection with my originator, right to the end consumer after closing, where there's a connection beyond my CRM that drips on them with an email that says Happy National Tortilla Chip Day, or Happy Valentine's Day, or it's your 1-year anniversary when you did a loan with me. People don't care about that stuff, but they do make their mortgage payment every month, and they do care about their budget, and they care about their credit, and they care about controlling their data more and more. So I like this experience. So we entered into a contract this year with FinLocker, and we're really trying to pump that out. But that's just our first use. It works great on the front end. I mean, if any of us that are listening has a CRM and you're trying to prospect and bring in new clients for future loans, well, this is a great prospecting tool as well. Hey, you know what? You're not ready? No big deal. You got to get your budget together, your finances in order. Boom, let me shoot you this locker, or let me shoot you this tool. You know, there's great points of sale out there that are giving borrowers more and more control. Look at Rocket Mortgage. You know, it still requires a loan officer for that particular point of sale, but they've been successful because of this trend of borrowers liking to have more control of their process. So for us as a lender, we're trying to use FinLocker and other borrower-controlled data aggregation tools to have a better experience. I mean, it's still the American dream. It's just a modern version of it. It's still a people business. It's still a fun business. They still talk to our originators. We still believe the originator at the local level, not some little headset dude in Detroit. We still believe the local originator is the best experience for a consumer, but you can also give them control of their data, and you're not losing control of the transaction as an originator. It's a way to do more, be more efficient. It's actually a value add, and it's trending really, really high right now, especially considering that our behaviors as consumers are being forced more into having to control, because you can't leave your house, you know. So you still. I apologize for that. I had an incoming call. Hopefully you guys can hear me. So even if there's 20%, yeah, no, it's not the incoming call. It always happens. But what I was going to say is, even if you have 20% unemployment, let's say that's the worst case scenario that we get to, it's still 80% employment. There's still 80% of borrowers out there that are employed. And when the secondary market and all these servicers find their liquidity, and everyone starts to see that the rates end up matching where the MBS are trading at. I mean, we're looking at 2.75% on a 30-year fix, paying back 2 points. $6 trillion in loans are going to be eligible for refinance. We'll be spearing loans out of the sky. But having said that, we're going to want to keep in contact with them after. We're going to want to continually prospect for purchase business, and tools like this that give borrowers empowerment, but hook them back to our teams, our originators. Very, very powerful trend right now.
Hey, Paul, I have a question I think you could probably help with. You know, there's obviously FinLocker is a tool we've talked about, and there's other data aggregation tools that people use. I've been hearing a lot about different ways that these tools aggregate the data, and starting to hear about a focused effort across the industry to kind of unify that data aggregation. Is there anything you can share with the audience on kind of the current state of data aggregation, maybe where it's going from a unified perspective?
Yeah, certainly. So the concept of data aggregation, as I described it, has been around for 20 years, maybe longer. And, you know, initially the whole notion was built around consumer provides their login credentials, and then the aggregator effectively writes scripts which pretend to log into the bank's website as though it's the consumer logging in. And once the login occurs, there are scripts that are written to pull certain data elements because, you know, at this bank, the balance sits at this certain pixel range on the screen. And so it's effectively technology that is tunneling into a bank in order to pull things from certain pixel spots where they know that they are. And over time, the process has matured And in addition, consumers have become more interested in, hey, when I provide this level of access, is this safe? Is it secure? The consent that I might provide today, what if I don't want that consent to exist for a tech platform a year from now? So things like that. So, how does it work? The consent, the privacy, the security, all of that continues to mature at a fairly rapid rate. And now there are a number of initiatives in the US market referred to as open banking, which are following behind some European initiatives of the same concept, open banking, that have really started to change the way aggregators collect credentials, the way they keep them safe, the way they access the banks to get less in a model of harvesting with scripts and more in a model of pulling things via API, and ensuring consent and ensuring that consumers have an easy place to see all the consents they've provided. You get a mortgage now, you don't get a mortgage every day for the next 6 years. So at a certain point, consumer probably wants to turn off the consent around the mortgage process if they're not actively involved in one. So that's a great example of consent management. So a lot of these techniques are underway. The bigger banks are further along than the smaller banks. And so there's a number of different techniques to help continue to move the aggregation market ahead so that consumers continue to feel safe and secure in what they're doing.
Yeah, thanks for that. John, you want to see if there's any Q&A? There you go.
Sorry about that. I had myself muted. All right, so let's move over to the Q&A section over here, and got a couple of questions over here. First of all, to pull in aggregated data, will consumers really provide their banking login and password?
It's Paul here. I'll take that one, and then if the other guys want to jump in, some will not, right? And you can look at different ways of cutting the U.S. population. As I mentioned in a prior slide, every night we pull for 10 million consumers, and that's just us. There are other data aggregators who are pulling for some of those consumers as well, and different consumers. So the short answer is, depending upon the use case and depending upon the demographics of a person, yes. In most cases, younger folks are very inclined to do this. The number of bank accounts that are connected to Venmo is in the millions, for example. Also, you have consumers who are interested in getting something done quick and easy, right? Even before this virus situation, we all had very busy lives, right? We had a lot of things we needed to do, a lot of things we wanted to do. If you're in the mode of qualifying for a mortgage and you find out you've got to go back home and find 3 months of bank statements and pull them down and make them into a PDF and then email them in, okay, sure, people have done that, but many people, when they're offered the opportunity to just provide their username and password to the mortgage originator, and 1 minute later that task is over and they didn't do anything else, an awful lot of people are really inclined, especially in a spot where rates have hit the point that they have. Folks want to take action quickly. So yes, many people will do this, but there are those who will not.
Right. Yeah, that makes a lot.
Oh, sorry.
No,
From a FinLocker perspective, what we see is when the relationship between the consumer and the originator, let's say loan officer in this case, is what's initiating the invitation to a FinLocker, we definitely see a higher rate for enrollment in the locker, and then a higher adoption and usage rate inside the locker with the credit and account linkage. So I think it's, and we're actually seeing, again, it's early and kind of a isolated data set, but in this current kind of environment, we're seeing a higher from our clients, as well as a higher adoption and usage rate.
And I want to add something. I mean, I think it's important to bring up a very, very broad topic, is a scarcity mindset versus an abundance mindset. And, we are not the entire audience, right? And so a scarcity mindset is like, I'm not going to help another originator or another company with advice because I don't want my competitor to have more information. Or I wouldn't enter my information into this thing because that's who I am. So I don't believe in this. You know, or if I'm on social media and, you know, I keep seeing the same videos over and over, you know, it just seems crowded to me. The reality is, in all of these scenarios, there is an abundance of business. There's an abundant audience. There is tremendous audience. I mean, you just heard from Paul. They're getting 10 million hits a day. Yeah, there's probably tens of millions of people that would never put their bank information in anything. Well, the good thing is, you know, things like FinLocker would still be valuable even if they didn't enter that. But the point is, there are so many people out there that resonate with so many different things that just simple questions like, will someone enter their bank statement? Like, I remember when Day One Certainty first came out. We're going on 4 years now. And so I think that question has been answered. And I think a lot of questions like that have been answered. You know, we're gonna do probably $3 trillion in business this year. Someone's going to like this. And I can tell you, there's a lot of people that like this, and a lot of people that are willing to try things out, like control their data in a consumer-driven transaction as it relates to mortgage. And I think there's plenty of evidence in front of us. So I want to kind of answer that question in a more broad scope.
Thanks for that, Kevin. I think you're absolutely right. I love the mindset, by the way. I completely am on board with that mindset. Another question came in here. Will lenders be able to get 100% of the data 100% of the time? I think that's something geared to you, Paul, but anybody can answer that.
Yeah, I'll take it first, and then I'll let anybody else jump in too. So I think assuming that 100% of the data 100% of the time, if I heard the question right, no, I would not assume that. Let me give you a great example. So yesterday, there were hundreds of banks, and many folks on the line may have seen this themselves. There were hundreds of banks that were, the online banking platforms were getting absolutely hammered by consumers who were checking to see if they had gotten their stimulus payment. Maybe some of you tried, maybe you couldn't get into your bank. What we saw, because we run thousands of bank platforms as well at Fiserv, is that the traffic to the bank platforms was significant. And so there were minor outages from time to time with many banks because of such levels of traffic. So if in a second you needed to get a PDF statement for the last 3 months from a consumer's bank account at, and I'll make this up, Wells Fargo, it may not have been available at 2:59 Eastern time. It may have been available at 3:10 after the traffic spiked down. So that's an example. That's a very unusual example from just yesterday. But there are banks that from time to time, you know, their platform goes down, their platform goes dark. They might be in a maintenance window. There are also some banks that notoriously don't like this. They may have very robust mortgage operations, and candidly, they would prefer that a consumer gets a mortgage from them, not from someone else. And so there are moments in the day or moments in the month where they may make it difficult for a short period of time. So I think what you should expect is a very high degree of reliability and access to the data. But I think assuming 100% of the data 100% of the time would be setting the bar higher than what really reality could permit. Brian, Kevin, anything from you guys on that?
My gut reaction was, see my last comment, about abundance versus scarcity. I mean, I agree with what you just said. It's just that's not a realistic bar, and it doesn't have to be to make this extremely effective or even greatly effective. That's all I'll add.
Yeah, I think you guys nailed that.
Okay, I don't see any other questions coming in. So with that, thank you everybody for joining us today. And we want to make sure that we do our best to deliver quality content. So I have a favor to ask all of you, if you could. You'll be receiving a survey within about an hour. And if you could please take the time to fill it out for us and let us know what you thought of today's webinar, it'd be greatly appreciated. And also, if you have anything that you would like to learn about in the future, in future webinars, please let us know that as well. I appreciate you all attending. And with that, that will conclude our webinar for today.
Thank you, guys.
Thank you.